What is up everybody, Gifford here, welcome to another video. Today we're going to talk about options trading and I'm just going to show you probably the best trade that I've done all year. So the trade I did was in Celsius Holdings, ticker symbol CELH. And it's recently come to my attention that Celsius has been having a hard time. As you can see here, it's just around about the $33 mark, but if we go back 3 months, we can see a decline in this stock. If we go back 6 months, we can see that it's quite a significant decline from sort of its highs around about $100. Go to year to date and it's tried to climb to that $100 and then fallen back down again. So we go to its 1 year and 5 years. So its high was around about $100. So I see there's a good opportunity in here. The PE ratio is still pretty high for this company, but I see that I can make some money from this using options trading. And for those that are new here, this is an advanced video, so I highly recommend you read this money guide here. I'll put the link down in the description, especially how to do it in New Zealand. I use the brokerage Interactive Brokers just to specifically do this. There is Tiger Brokers. I don't use them because I don't really trust that kind of platform and where your money is and the kind of protection. I highly recommend Interactive Brokers. I've got a link there if you want to sign up and use my referral code. Otherwise, have a look at this, understand what the fees are, how you get into this. It's quite complex of how to set this up. It's not like Sharesies, so it's very difficult. Give this a read. And after that, at the end of the video, I'll just give you more information so that you can learn Interactive Brokers from my other videos that I've made in the past. So getting into the trade, you can see the transactions here as proof that I did it, and this happened on the 7th of October. And the one that I want you to focus on is this one here at the bottom. So what I did is I bought a call option for January 15th for 2027, and that was a $30 call option. And obviously to do a call option, you got to pay money for it. So that cost me $11.90. Now you times it by 100 because it's 100 shares. So really I paid $1,190. So what this means is that I'm expecting the price to be over $30 in January 2027, but also the price actually has to be over $41.90 because I paid for the option as well. So that gives me a lot of time and I'm pretty confident that Celsius is going to be over that price in 2027. So I'm happy to take this trade. And remembering with options that if the price is over that $42 mark, for every dollar that is over that, I get $1 back, and that's how you really make money. So why would someone do this trade? Because with options trading, I can control 100 shares. So I'm controlling 100 shares for $1,190 as opposed to buying the shares outright. If I was to buy 100 shares right now, it would cost me whatever the share price was, which was, let's just say it's $30. It cost me $3,000 to hold, to control 100 shares. But in this case, it's only about 1/3 the price, and I'm happy to do that. So how do you make money in this trade? You got to understand options value versus time. Here's just a simple graph of how that works out. So basically, the value of my option that I paid for is $11.90, and that's about here. Remembering it has a strike price of $30. Just think of it as $11.90 is up here, and it makes money only if it's above $41.90 mark. Okay, or above $30, in which case that the graph actually would go up here because I'm making money. If it's below that mark, below the $30, you get $0. Now, just bear in mind that this is just a graph representation of just me explaining it of what's going on. So options have time value, and if it goes up the short term, well, that time value also goes up, right? So if the stock does actually go up, then that's how you can start multiplying your returns because the price is going up a lot quicker. Remember that the decay is sort of even all the way through, but because my option is so far away, which is in 2027, therefore, if the price goes up sort of short term up, then I can make a little bit of money, which I did in this trade here. Well, not a little bit of money, it's quite a lot of money. And it's also the same way. If the price actually declines, then you're going to lose a lot of money very quickly. So say, for example, the stock price drops down to $20, then this $11.90 is just going to get demolished, right? It'll probably only be worth like $4 or $5. I've lost 50% of my money in a short term, and this is the problem with options trading, but it can also give you some good returns short term. So what actually happened? Well, the stock price actually jumped up by 10%, and I'll show you that on the graph. Therefore, it increased the options value from $11.90 to $15.80. So I sold it. So I ended up going, well, that's a good profit in 7 days, so a week's worth of trading. So I was happy to sell that because it went up in such a short term, and I knew that eventually it was probably going to go back down again because of market volatility. So if we take the $11.90, take it away from $15.80, you can see the difference there is $3.90, and if you times it by 100, basically I got $388 plus minus the commission fee. So you can see that here of 85 cents. So I ended up making over pretty much 600 New Zealand dollars in 7 days. So having a look at the chart, I bought the call option around about this price, around about the $30 mark, and you can see that it sharply rose up by about 10 to 14% there, and that's why my options value went up. And we just go into another graph of Celsius Holdings. It's just again showing you what happened in there, and you can see these lines here. I know it's a bit confusing, but what they are is the Bollinger Bands and the 2 standard deviation, which covers about 95% of the stock movements. Again, if you don't know what I'm talking about, I highly recommend, I will put a link of a playlist that I have there for you to understand options trading from someone that was a beginner learning about it and just showing you how I did this. But moving on, you can see here the stock price that's in the blue, that it went up to the lower end and it did touch on this lower Bollinger Bands, which meaning that actually it had a really good chance to come back up as opposed to going back down, because it was the stock was actually trending down and it was finding a lot of support. So I decided to do the trade here knowing that I was going to get a good upside to it, and that's exactly what happened. And you can see here that it did come down again, so that's why I was happy to sell it, because it's in the top of the Bollinger Band, right? And that's what I consider a pretty good setup, good trade. You can see here that when it gets low again, it is likely to come back up again. In this case, it didn't, but it can also happen on the way down. Okay, if it goes to the top end of the Bollinger Band, it's likely to then end up going down. Has to find some sort of support to be able to break that through. But you can see there that if it hits low, it will really start to, you got a good chance of it going up, just like here when it went up, but obviously it couldn't sustain that. So this is a really good indicator to help with options trading. So the maths behind this trade, again, I told you how that it's calculated with the time value in it. Sorry, this is a bit pixelated, but that's just because it's from my spreadsheet and I've just blown up a bit. I'm pretty lazy, so what I like to do is I like to shortcut things, and I made a spreadsheet. In here, it's just basically Excel, right? It's in Google Sheets, and I just plug in my numbers and it kind of tells me my returns. So it's pretty unrealistic because I've got like $388 was the profit. You divide that by the capital that you used, times that by 100 to get you the percentage, and then you times that by 52 weeks, because that was only a 7-day trade that I did there. So highly unlikely I'm going to be doing every one of those trades, but this is what you do with options trading because it is a short time frame. So you kind of annualize it, therefore that short trade works out to be a very big number, in this case 1600%. So after explaining the trade, what is actually the goal of this portfolio? Well, it's to make monthly income from options trading. I now don't have my second job or even a third job anymore. That just makes a little bit of money, so I'm wanting more income as well to supplement my first job, and options trading, while it is risky, gives me this ability. So my current target at the moment is 90 to 100 New Zealand dollars, because I'm working with a capital of $20,000. So annually I want to be making $4,000 from that, which roughly is about 77 New Zealand dollars. So I am aiming a little bit higher than that. And with making 600 New Zealand dollars from that last trade, that's basically 6 weeks of trading. And so that's a really good amount of money for such a short term. So now I can kind of relax, try to wait for the next setups and what I'm doing. And this is why I like options trading as opposed to the other side of it. I've got my safe, dividend investing, but I also like options trading because I think it's way better chances than the casino, right? Or the pokies when you put your money in. I'd rather spend my money here. This is a lot of money. Am I willing to lose it? Yeah, that's fine. I'm willing to gamble this money to get some good higher returns. And if I'm skilled enough, I can do it consistently for a long time. So this is my tracker here because I've only recently started again. I did stop for about a year because I did lose some money when I started and learning at the very beginning. I've got videos on that. I show you how much I lost, how much money I made. But this time I'm trying to do a little bit safer, a little bit more consistent. I'm a little bit older, a little bit wiser, have a bit of experience in this. But you can see that, am I getting my target? So that's 54 US dollars there, which is about 19 New Zealand dollars, right? And it's just a straight yes or no. When I was starting, I was a bit conservative, but then I started going for a bit more risky trades, and you can see here that I am making money. In this case here, well, it's almost twice as much, right? So it's probably a little bit too risky. And here I'm putting the risk right up. So I should probably calm down a little bit, because this is what happened last time, where I get too excited, start making too much money, and in this game, it's very risky. Options trading is pretty much pure gambling. So, but we can see here, I've had a good week, so hopefully I'll be relaxing. So that trade was last week. This is the current trade that I'm in at the moment. And here's just the notes of the line. So I have a full tracker to understand my trades, spreadsheets that I follow in behind to see if I'm doing a good job and understanding my risk levels as well. So I've got it tracked out till the end of the year. So I'll be doing maybe a monthly video on my options trading. I know some people out there are interested, and this is really what I find fun. So a quick summary, where did I get $10,000 to put extra into my options trading account? You would have seen that. Well, it's because I was actually going to buy a car, and that didn't work out, but that's for another video. So therefore I now have a $20,000 options account that I'll be making income from. So for 99.9% of people in the stock market, you should really be having a more safe strategy to grow your wealth over time. I highly recommend just going straight out and buying VT, which is a world market index fund, and sort of set and forget that. Put money in it every week, $200, $300, $400, whatever you can afford. Even if it's a small amount at the very beginning, it will all add up. Obviously, you are fighting against inflation, 5%. The US stock market has theoretically given you 8 or 9% every year compounding. So it's a really good way to do it. This stuff here, I'm just showing sort of the gambling side of the stock market trading and how you can make a lot of money very quickly. But obviously, you've got to understand the risks. I do. I'm just sharing with you what I do in it. If you have any questions for me, put them down in the comments below. I'll answer them whenever I got time. Remembering that this is only one part of my portfolio. I've got 4-5 different strategies that I'm going along. This is the biggest part, which is $20,000 invested in options trading. But I'm hoping my other safer ones will eventually come up, and I'm using this money to invest into the other portfolios to get their values up as well. If you want to support me and start investing yourself, I do have some referral links down below, so click on those to have a look. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use Investnow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. If you're interested in what I'm doing in the market, I also have an Instagram where I post every other day of what I'm doing in the market, what the market's actually doing, what my trades are, and how my portfolios are going on. So this channel is about my journey in the stock market and what I'm doing in it, so I share it with my viewers here. I also do a bit of personal finance and a little bit of property investing. And if you click this video here, is all about my Sharesies dividend portfolio. I started investing in 2020 in Sharesies, and I've expanded into other brokers as well. I have my total stock market portfolio, including my KiwiSaver, and it's now over $120,000 New Zealand. Thank you for watching, and I'll see you in the next video. Goodbye.